All right, end of day. So flat. Realize vol crushing again. That'll help put sellers going into tomorrow. So far, we've managed to hold the prior week open, with except for a small slip earlier today. We closed below 69.63 today on ES, which is some significance. That's below yesterday's, just a little couple points below yesterday's close. This does open up another test to the downside of last week's close, but fairly flat on the week right now. A failure of 69.36 would be a confirmation of the rejection from the upside, marking a lower high on the bounce, and that opens up a pullback to like 68.90 or 68.67. I think that looks pretty good to fade into tomorrow. There's not a lot of volatility tomorrow though, so we'll see if bulls step in and try to start selling some puts here. Yields snap back after yesterday's decline. Mostly in the 2s and 5s, but a little bit at the top end. Dollar stabilized. Oop, that's not where that's supposed to go. Okay, commodities, we got silver and gold continuing up. Agricultural commodities falling a little bit, but oil back up around 65 a barrel. Correlation broke down into the end of the day, marking a higher low, both for 1 and 3 month correlation from the end of day yesterday. Still not a lot of big moves there, but it is kind of interesting that short-term correlation broke down a little bit more. Bond volatility slowly ticking up, but still no significant moves in 3 month correlation. Leverage on the carry trade breaking down. USD JPY at 153.22, and continuing to move down. We're seeing leverage break down at the top end and the short end of the curve, although a little faster at the top end. Forward yield on volatility seems to be stabilizing around -8%. And the margin of error on silver paired with the carry trade is starting to turn a little positive, but it's not very positive yet. So I would say silver has a little bit more that it can run before we see it turn around. Quite a bit more, especially if cumulative cost to carry continues to rise. Skew up, breadth a little tighter after today, but tech mostly holding the market up from larger drops. Fed fund future cuts were starting to price up in June, and they got wiped out again. 10-2 at 66. And SOFR picking up a little bit, now neck and neck with IORB as we move into the OPEX expiration, which will be next Friday. Feb 20, the OPEX expiration? Wait, hold on. There's 4 Fridays this month. Yeah, Feb 20. Forward yield on volatility, or not forward yield on volatility, sorry. Correlation between cash VIX and VX ticked up, now 82%. So we're seeing a bump in correlation, which means fewer put sellers. One of the reasons we failed this morning's pump was because of the lack of put sellers. What's been happening, and let me actually kind of try to break this down for you guys, because this is probably interesting, both from a gamma strike standpoint and from just general market knowledge. Basically, on our previous spike in volatility, we had HV very low. This was last week's kind of moderate correction, and IV very high. These collapsed towards each other, because this created a very, very positive VRP on the front, and this means volatility return premium. Basically, this means selling puts carries less risk and has more positive carry. Okay. So everybody sold a shitload of short-term puts. These collapsed, but then IV went up and HV went up. We started to get too much realized volatility from the bounce, and then IV moved up with HV, and this creates thin VRP. It's still slightly positive, but it's very thin because the spread between IV and HV is narrow. Now, what this does is it creates a scenario where you don't want to sell puts. Put selling bad. And the reason that put selling is bad is because, well, that put is priced fairly close to its performance, or its expected performance based on prior performance. And so if you're selling those puts, you're taking a massive amount of risk that these don't just continue to move up. Yesterday was moderately flat. Today was pretty flat. That's going to slow down the climb in HV, and so HV should level out with that move. But IV didn't really drop much, so IV kind of leveled out too. And so tomorrow's a bit of a question on what people are going to do. VRP is still thin, so ideally bulls would want more flat days, like 2 to 3 more days where the index is flat. That way HV starts to fall while IV stays elevated or IV moves up. And this opens up the spread. And as HV continues to fall, that spread gets wider, and that's when you start to get like a bullish continuation because it's incentivized by the pricing in the options market. What bulls don't want to see, especially ones that sold puts today, which was less of them than yesterday, is both of these continue up. Because if they do, they will get squeezed out of those short puts and the index will tank. So keep that in mind when we're looking at this, when I'm writing up information about volatility every night, which I do increasingly larger and larger section on, because I really want to highlight the importance of those metrics and what they mean and how that's affected by skew and the different things that you're looking at when you're looking at that data. Because not only are you looking at IV HV, you are looking at the IV 10 minus IV 30 spread. You are looking at the SK10 versus the SK30 and seeing where puts are bid up or where puts are, downside convexity pricing is falling or downside convexity interest is falling. And then you're also looking at VRP, which is that IV minus HV. And looking at these three metrics paints a picture of how options are being priced in the market, irrelevant of where positioning is. And if you understand how options are being priced, you understand how options are going to react to where positioning is, right? If VRP, and this is what I wrote last night and what I was kind of trying to convey is that we had very thin downside gamma support. And there was very, very thin VRP on the front. And so this means two things. This means price can fail easily. And when it does, nobody wants to sell puts. So what does that tell you about a downside rejection? It will have continuation, right? Because even if it does find support, no one's going to want to sell puts there. And so it'll just continue to drop, which we saw on today's rejection, right? Like, if we go back out here, you can see, nobody, we hit the 50, which is where the primary support across like the next 30 days is, and then we just dumped right through that. It wasn't until we got down into a negative gamma environment down here where we saw put sellers step in. And that's because the 0 DTE puts priced up to a point where they were worth selling. But, the flatter day, we'll see what it does with HV tonight. keep an eye on that, but it can tell you a lot about price action, going into the next day. And so pretty important stuff. And if you look at put premiums this morning, they fucking exploded. Like put premiums at market open were around 1.57 mil, and they peaked at around 3.24 million. So, and that's how we understand how positioning, like volatility is how we understand how positioning price is going to react to positioning in the market and how that positioning is going to change relative to price. Okay. So I thought that might be a little bit helpful. Anyway, I'll move on. Leverage dropped and then bounced back up a bit today. Volume's still down and really not much of an improvement on the prior close. Sector-wise, electronic tech took off, but tech services, banking, and health tech are still failing. And we're getting stronger rotation into defensive sectors, while producer manufacturing continues to outperform. And then here, that's a second breakout of the upper trend line and a rejection. We're starting to form an inverse head and shoulders, but we don't really have the low test yet. We would probably want to see the index move below like 69.20 down to the 68, 70-ish range. Somewhere in here, like 70 to 62, in order to confirm the right shoulder of that before a move higher. I would say that if we can fall there and HV crushes, that'll give this range in here will give bulls some decent support. However, if HV10 continues to rise, so if that move happens all at once, we close there, the next day we'll probably go down further because the pricing on those puts is going to remain elevated and the risk on them is as well. No problem. So thank you guys for tuning in. I'll see you tomorrow. Have a good night, everyone. Later.